Hello and welcome to Car Dealer Live. My name is James Batchelor. Now, falling used car prices has been a subject we've been covering in detail here at Car Dealer. One thing we've been paying particular attention to is the very apparent disconnect between trade and retail prices. Now, joining me to get to the bottom of this and for an update on the new and used car markets, including some predictions for next year, is Auto Trader's Ian Plummer. Hello, Ian.
Hi there, James. Nice to see you.
Always good to have you on, Ian. Thank you so much for joining us today. Now we're speaking in the middle of December. Now it's the quiet season traditionally. What are you seeing in the retail market at the moment?
Well, I think you're quite right, first of all. It is the quiet season, and I think to a degree we need to remember that when we think of seasonalization and so on. And it is typically a quieter month, like November would be quieter than October, and October probably slower than September to a degree. So it is understandable that we see a slowdown in sales numbers compared to the month prior. But actually, when you look at the month a year prior, the numbers are very good. When you look at any of our metrics in terms of market health, what we describe as the balance of supply and demand, that's looking robust. That's up about 9% on prior year. Speed of sale of used cars is very good. We're tracking at 32 for November, which is the same as November prior year, 33 at the moment for December as we stand, against 36 last December. So generally, pretty good market health, but most importantly for retailers, that's resulting in strong sales numbers. So we've seen, if we reflect on the whole year, we've seen strong used car sales around 4.7%. I think we were up at the end of Q3. And we're seeing similar numbers in October, November. I think we finished November around 5%. We just finalized those data points. So it feels like actually reflecting positively on the whole year, but also giving a perspective on prior year, even though numbers are lower in November and December than they would be the month prior. With that context, they are actually pretty good.
I know your data, you're just saying it there, and I've been reading a lot of your data lately, and you say demand is high, like you're just saying, speed of sale is strong, and I don't disbelieve any of that at all. But we have heard from a few dealers that they're experiencing very, very quiet demand at the moment. I mean, is demand really equaling transactions, do you think? Or do you think in that case it's just the dealers who the dealers, some whinging dealers are getting very sort of shouting loudly? I mean, what do you think it is?
Well, I certainly wouldn't describe any retailers as whinging. That's for certain. Don't put those words in my mouth. But I think there's understandable nervousness in the market, and I think we saw similar nervousness last year at the same time. I think in the tail end of 2022, we saw a lot of retailers worrying about whether they should be stocking up, because obviously there's a slowdown in the market, and we'd lost those sort of natural reference points, haven't we? We still think, don't we, in terms of what was I doing in 2021 at that point, and how was that comparing to 2020? Because those numbers were so up and down, and then 2022 compared. We're still working through that. And I think the nervousness, therefore, is understandable. It meant that some people last year didn't buy as many cars as they perhaps could and should have done. They started the year 2023 a bit slower than they could have done, and vice versa. So I think there is understandable nervousness. But equally, when we talk, there's always the risk of talking in aggregates and averages, which don't mean something to an individual who's seeing something very different in their showroom or on their forecourt. So if you're in the franchised world, you're probably seeing a little bit more pressure than in the independent sort of dealer world, where you're selling older cars, which are faring best at the moment. The side of the market that's sort of suffering in terms of price movements is the youngest used vehicle cohort, which is suffering from the comparison to an increased level of discounting that's happening now on new cars. And that's only happened since the summer, particularly on electric vehicles. But some electric vehicles, brand new, are becoming comparably attractive compared to a used ICE model and so on. So that is a challenge for retailers, and that is creating some negativity out there. But if I just go back to the sales numbers, you mentioned disconnect between our sort of market health or demand metrics and sales. What I tried to highlight in my first answer was that the actual sales numbers are very good. They are better than prior year November by around 5%. So again, they could be lower than October, probably are. But in most cases, more so in independents, to be fair, than franchise, they are better than they were prior year November. And it looks like that trend is going to be continuing in December.
Yeah. So, Ian, like I said in my intro, we've seen a real softening in trade values recently. Are you seeing similar trends on the retail side?
Well, we've seen similar retail trends, and equally on our trade values. So the trend is comparable. but it's not as fast or as deep. So that is quite distinct difference. So there's a clear decoupling of trade and retail values, which has happened in the last 3 months, as there has been some negativity in those last 3 months in terms of year-on-year movements. Those last 3 months are the first ones we've seen of negativity after 41 consecutive price growth periods. So it's quite new, and I think that feeds the nervousness that's out there because we've almost got used to used cars appreciating as assets, which is rather odd. But this disconnect is really quite important because fundamentally, we always believe that a used car is worth what a retail consumer is prepared to pay for that vehicle. I think that's a logic that should apply in any vertical, cars or anything else. And a used car consumer, including those looking at Auto Trader, looking at the price indicators on our platform, don't see the trade values. So in some cases, we've seen large remarketing entities putting cars into the market, not selling as many as they would like to sell of their cars put up for sale, partly because of that nervousness I touched on earlier, when last year as well, people were worried about, should I stock up, should I not? So if they're not buying those vehicles, the traders going to the auctions, online auctions, etc., then the seller of those large cohorts of cars is going to think, well, I need to maybe reduce the prices of those vehicles. So they need to sell them. They can't keep them on their balance sheet. But actually, going back to my sales numbers, the retail sales numbers are up on prior year. The consumer is still happily buying cars at the retail values, which are still slightly higher than the trade values, although they've declined. My point would be that I would urge retailers to focus on the retail back methodology and not obviously a trade up or an SIV up approach, which I like to think has been long gone, but it does feel like to a degree there's been a bit of that happening more recently. And that's the dislocation that can feed almost a contagion point in the market where retailers look at each other rather than look at what the retail consumer that they're selling to is prepared to pay for their car.
Mm. I mean, what do you think dealers should do then? Because, I was looking at some of the data that you shared recently, and it would appear, and correct me if I'm wrong, but it would appear that 80% of franchise dealers are reducing prices.
Yeah.
68% of independents are also cutting prices. Do you think dealers should be doing this, or do you think they should be not worrying and holding firm?
Well, I think dealers should be looking at the data, as always, and if the data is pointing for a particular vehicle to a price decline, then that's what should happen. In the reverse, obviously, should apply. If the consumer is not expecting a price decline, putting one in because you're buying the car more cheaply, which is a great opportunity, and a point being highlighted increasingly by retailers at the moment, would be a bit daft. You're missing an opportunity to price the car as high as it can be priced. And let's reflect as well, those price indicators on Auto Trader are the reaction to what retailers are positioning the cars at, but they are what the consumer will see. So if you stick to price indicators right now, we can see a large cohort of cars that are being underpriced when they're coming to market. So equally, like you mentioned, people are reducing prices perhaps increasingly or faster than they perhaps ought to, not looking at the data as much as they perhaps could do. So we just stick to the cars that are coming to market, perhaps underpriced. If we take our 100 as the reference point, we would always recommend people come to market anywhere between 98 to 102. That's the sweet spot where cars sell best. More than that, they look a bit out of kilter. Less than that, they look a bit underpriced and a bit odd. There might be something wrong with them. But actually, if we look today at the cars that have a high retail rating on Auto Trader, that's above 60. Those are the cars that have a high demand, low supply. Of those cars, we have a huge cohort that represent a lost value to retailers of around £32.7 million as we speak today. That means there's £32.7 million of underpricing happening on cars that have high demand that would ordinarily be bought happily by consumers, seeing price indicators on Auto Trader, which would position those cars at the good and fair pricing level of a base 100. That equates massively to around £4,200 per retailer. There are nearly 8,000 retailers in the category of people doing what I just described. So again, back to my start point, focusing on the data is always the relevant sort of angle I'd put into this sort of conversation now more than ever, and there are some opportunities being missed.
Yeah, that's a huge figure, and I'm glad you've highlighted that. It's really quite
Can I just
amazing.
add as well, James, that number we called it out a couple of weeks ago, and it had just risen to 30 million, and we thought that was a big headline. And like I said, it's now 32.7. Just looked at literally yesterday.
Wow.
So the number has grown quite considerably. If we look over the last 2 weeks, I think it's grown by 4 million. So the phenomenon, the sort of contagion factor, is getting worse rather than getting better. I just urge people to look at the values that their consumers, their retail customers, are seeing, and not miss those tricks, particularly on those high retail rated cars.
Yeah, well, very interesting, and thanks for highlighting that. I'm very keen to get your views on the year ahead, but before we do that, let's just look at the year in review. And what do you think 2023 will be remembered for? I mean, what were the big changes or developments in the market, do you think?
Well, it's an overused expression in automotive that there's an awful lot of change going on, but there really is, isn't there? It's been a busy year and a landmark year for several things. I think there's probably 3 points that stand out, but the first I would describe as the 2023 year could be classified as the year when online became more omni-channel. We've seen movements in both directions, haven't we? With a lot of pure digital players building in physical premises and so on. Even the likes of Tesla as a sort of digital brand, let alone the digital retailers, have done all of that. And the retailers that are more baked in the bricks and mortar side of things have really embraced the need to enable consumers to do more of their car buying jobs online. So enabling digital journeys all the way through to great physical experiences is the kind of hybrid model we see more and more as being the way to go to market these days and what consumers are looking for. The second, I think, key turning point is around electric vehicles and the way the new car market has pivoted, I think, in the middle of the year, going from a supply constrained environment to being one where it's all about creating demand, particularly retail demand. But there's also been linked to the EV point, the arrival of agency models and new market entrants coming in, particularly from China. And those are all very connected points, of course. But the challenge, I think, as we look forwards from that context, is that you've got an EV market that we get a lot of interest in across the wider industry and even in the media and in the public. It is the direction of travel that the industry is on. It's an unchangeable, I think, direction of travel. Lots of challenge about how quickly we go down that route. But I think the key point that we're starting to see already this year, and we'll see more of in 2024 without doubt, is the growing need for brands to increasingly attract consumers with a price message. The price gap on EVs is declining, and it's probably going to get squeezed from two directions. The ZEV mandate requiring manufacturers to hit 22% of their sales as electric starting from next year. Real push there, and equally an increasing competitive challenge from the increasing numbers of makes and models that we're seeing in the UK. So a real key point of focus we'll no doubt talk about through the year ahead too. And the third last point is just the robustness of the used car market. We expected supply to return in new cars. It did, but not massively. And overall supply has only been up 2% in the course of 2023. And there is no surge of supply seemingly on the horizon, with demand, as I mentioned, still very good. And overall used car transactions good. We've seen a positive, robust used car market. And I think if we look back, it's a decent new car market, a decent used car market, maybe not a euphoric year, but a pretty good year. So 3 points, online has become omnichannel. EVs seem now pretty well established, but a lot more to happen. They're pretty much here to stay, though. And used car business seems to have been pretty resilient overall.
Yeah, yeah. Well, let's look ahead to next year then. How optimistic are you feeling for the used car market?
Well, overall, we do expect to see some growth in the market. We expect the 2023 market to finish at just above 7 million cars. It was just below 7 million the year prior. And if you remember pre-pandemic, we were often at 8 million cars. But without as many vehicles in the park and the fact that we have a 3 million gap of cars, the ones we didn't produce in 2020, 21, 22, when the new car market was just 1.6 million instead of, let's say, 2.5, that's left a dent in the market. But going back to forecasts for next year, we'd expect the used car market to be back above 7.2 million. So a slight increase again. And we expect probably to see a continuation of the kind of positive demand we've seen on Auto Trader in the last year and more. Our site this year is up roughly mid-teens in terms of numbers of visits and visitors. It's up around 35% on pre-pandemic. So we expect the trend towards the robustness of used car demand to continue. And generally, when we look at all the factors affecting consumer confidence, which came out today as being slightly positive again, consumer sentiment for car buying confidence is very robust. So more than 80% of people plan to still buy in the next 6 months. More than 80% of people claim to be at least as confident, if not more confident, in their own affordability of their next car than they would have been a year prior. So or added to that, the fact that all our research shows that people think that cars are not a discretionary item. They still have a job. Unemployment forecasts are pretty good. We think that's going to flow through into a pretty robust context for next year.
Hmm. And what about new cars? Because I mean there are, I mean you touched on a couple looking back at 2023 really, and I think some of those are just going to flourish in 24, such as ZEV mandate, more electric cars need to be sold, more supply, more brands appearing. I mean, for you, probably putting an answer in your mouth there, but for you, what do you think the big themes next year are going to be?
Well, firstly, if I just can link back to the used car market briefly, I
Yeah.
mentioned a moment ago that the dearth of vehicles sold new in those 3 years of pandemic and supply chain affected years has affected obviously the used car market. I think that's a key point to put into the context of how we even look forward in the new, but definitely back into used. If I come back to that 1 second, because those 3 million cars that were missing from that period, they are always going to be missing. And when we think about our perspectives on the used car market, let's not forget that the 3 to 5 year park, for example, will be down around a third next year compared to where it would have been ordinarily. And the same will apply to the other categories of the 2, 3 year old vehicles and so on. So hopefully we will see an arrival of a bit more new car volume, going back to your point around the new car expectations. We'd expect the market to be almost up to around 2 million. The SMMT's latest forecast is similarly at 1.97. So it's slight growth on this year. This year has been okay. We've seen a growth of just under 20% again, similar to the year prior. But it's been a market driven by fleet, isn't it, rather than retail. Retail's been pretty flat. It's only up a couple of percent. But what I think we're really going to see, to your other points about the other factors playing on the new car market, is a lot more push. As I mentioned, from the summer, we could see an increasing amount of discounting happening, particularly on electric cars. And they went from being in high demand with lots of vehicles with big order banks and long lead times and so on, to a point where actually all of a sudden we need to prime that demand. And that means consumer offers. So we've got a roughly third of the EV market that we see today, new EVs with a 0% offer on them, and a third with subvented finance on them. And a discount level on top of that's going to around 9%. So that stimulus that's coming into the market is going to be a driver, hopefully, of positive retail demand. It will see more pressure coming through onto the retailers on their new vehicle businesses, for sure. And there's a return to sort of more stringent targeting, I think, coming from brands. No surprise there. But hopefully that can happen in a way that's relatively, let's say, serene, not too stressed. I'm a little bit nervous that we might see more of the latter than the former. And if that happens, that is going to have, going back to the start of my answer, a bit of a contagion effect on the most recent used cars, because they will look comparatively expensive if the continuing discounts happen on these new vehicles.
Yeah. I think personally, I think next year's going to be even more interesting than this one. But that's my personal view.
I think there's going to be as many strategies from OEMs as well, aren't there, as
Yeah.
there are OEMs, because they've got this ZEV mandate to juggle. Will they be able to push enough ICE? Will only if they sell enough EVs? It's going to be a very interesting market.
Yeah, definitely. Now for the dealers watching this, what do you think their New Year's resolution should be?
Well, I think in the context of all we're seeing in the market, with a return to more like value, it was value over volume for the manufacturers, more like volume over value right now. Robust used car demand. I think we focus on the longer term and look at with a bit more perspective on the sort of nervousness we've seen in the last few weeks. And then thinking about that point I've made already about data and the fact that that really is the currency to build success upon. It's the foundation of any successful used car business, but also new car business. I would recommend a resolution that would focus on that point around data. And we're trying to do our bit in that regard. We've got trended valuations that are coming into the market right now that gives retailers a forward view on the cars that they might be looking at, or the ones that they've already got, so that they can take a forensic car-by-car approach to how they go to market. So I think ultimately data is king.
Data is king, indeed. Ian, thank you so much for that. Some fantastic stuff there. But for today, thanks very much for joining us.
Thank you, James.
Well, that's it for today's Car Dealer Live. Join us again very soon. Bye-bye.